Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 845A, and today's date is December 17th, 2015, and the title of this episode is The Fed Rate Hike Ushers in the Next Phase of the Economic Collapse. Now, before I get started, I just want to make an announcement. I just uploaded a new interview with Andy Hoffman. If you go to the X22 Report Spotlight YouTube channel, you will see that video. Or you can come over to the x22report.com site, scroll down a little bit, look over to your right-hand side, you'll see the video right there. Let's get right into the economic collapse financial news. Now, we've been looking at a lot of economic indicators, and they're all pointing down. None of it is showing us that we're in any type of recovery whatsoever. And everything that we looked at, manufacturing, when we looked at retail, when we looked at housing, when we look at unemployment, we are showing that things are deteriorating quickly. I mean, if we look at the Philly Fed, it has collapsed to a negative 5.9%, missing their expectations of a positive 1, and hitting its lowest level since February of 2013. New orders have created to 3-year lows. So when we look at this entire situation, nothing has changed at this point. Even though the Fed made its announcement, and we know the market rallied up to 200 plus points or so. Well, today it's down 200 plus points, so nothing has been gained. But what we're seeing is the corporate media, the U.S. government, all clapping their hands. They've done it. We are in a recovery. Everything is settled. We've heard that before. And everything is going to go smoothly. But we have to remember, we're going into an election year in 2016. And during an election year, they're going to do whatever they possibly can to make it look like everything is absolutely fine. We saw this in 2008 until the very end, right before the elections. And we're going to see the same thing happen once again. They're going to lower the unemployment rate. We'll probably get into the 4s, 4.8, 4.9. They're going to continually tell everyone how we're in this incredible recovery, that we went from 2008. We created all these jobs, which there were no jobs created. Actually, we lost millions of people in manufacturing. And they're going to try to convince us that the central banking system has created all of this currency, brought us into recovery, and now raised the Fed fund rate by 0.25%. Hurrah, hurrah, we are in a recovery. Now, this is all part of their major illusion. And what's very interesting is that the Bloomberg Consumer Comfort Survey found that 69% of the people had a negative view of the state of the economy. And when you look at when people were looking at the economy saying, okay, it's good, it's bad, and things like that, there were times during 2015 where the state of the economy was much higher than it is today. And the Fed said, absolutely no, we're not going to raise the rates. The Fed decided to raise the Fed fund rate at the lowest point of the economy, which is kind of strange at this time. And the question is, why did they do it right now? Because what's happening around the world, what's happening here in the United States, they realize that they cannot push this economy forward any longer. It's getting harder and harder. Their statistical numbers don't even match up to the real economic indicators anymore. They're so far apart because everything that we've been discussing makes no sense from what they are saying. And Paul Craig Roberts is out there saying, what does the rate hike really mean? And he went on to say that it means that the Fed has had time to figure out that the effect of this small rate hike would essentially be zero. In other words, the small increases in the target rate from a range of 0 to 0.25% to 0.25% to 0.5% to 0.50% is insufficient to set off any problems. In the derivative market, stocks, bonds, housing, but we knew this. We knew that this wasn't really going to have an effect. And the question is, why did they do it? They had to do it Because the world was looking at the central bank. Remember when I said the central bank does not want to be blamed for this collapse? Because the central bank wants to rule the world once again and start the system completely over. And if people catch on that it's the central bank that's causing all these problems, this wouldn't be possible. So they had to convince everyone and bring everyone into this illusionary world that we are in a recovery. And this is exactly what they just did. This is a signal to everyone that the next phase of this collapse has begun. Because now they're at the point where they're going to have to raise it again. And as they continually raise it, this is going to be troublesome. And they know this. And this is why we need to be prepared and ready, because they're ready to bring home this event. But Paul Craig Roberts went on to say that the purpose of raising interest rates is to choke off credit demand. But there was no need to choke off credit demand because there was no demand for credit. And basically what he's saying is that this whole rate hike is a complete fraud. The banking system as a whole does not need to borrow as it is sitting on about $2.42 trillion in excess reserves. The negative impact of the rate hike affects really only smaller banks that are lending to consumers, to other businesses. Now, if these banks find themselves fully loaned up and in need of overnight reserves to meet their reserve requirement, they will need to borrow from a bank with excess reserves. Thus, the rate hike has the effect of making smaller banks pay higher interest expense to the mega banks. In other words, the rate hike just facilitates more looting by the 1%. That is it. Now, by increasing the Fed fund rate, this eventually is going to implode the financial system. This one increase is not going to do it. We will see cracks. We will see things starting to fall apart. But again, the U.S. government, the Federal Reserve, they can hide this with their manipulation of what is really going on. And back in June of 2014, the ECB cut interest rates to negative. So before this, the interest rate differential between euro and the U.S. dollar was just about 0.25%. And the U.S. dollar was yielding about 0.25%, while the deposit rate on the euro was exactly zero. This was kind of significant. The interest rate differential was not enough to kick off a complete flight of capital from the euro to the U.S. dollar. However, when the ECB launched NIRP, negative interest rates, cutting its deposit rate to negative 0.1%, the rate differential went up to 0.35%, and basically resulted in vast quantities of capital fleeing euros into dollars. So there are over $9 trillion in borrowed U.S. dollars sloshing around the financial system, and much of it is parked in assets that are denominated in emerging market currencies. The very currencies that have imploded as the U.S. dollar has rallied. This is the U.S. dollar carry trade, and it is a larger in scope than economies of Germany and Japan combined. In short, when the ECB cut their rates to negative, the U.S. dollar carry trade began to blow up. Now the situation has worsened because basically the Fed has raised the Fed fund rate. And what this means is the differential between euro and the U.S. dollar has hit 0.75%. This will trigger a complete implosion of the $9 trillion U.S. dollar carry trade. At this point, the $9 trillion U.S. dollar carry trade will implode, triggering a 2008 type of an event. So what is the timeline of all this? Most likely this is going to happen in 6 to 12 months. Because as we know, the Fed is saying that they're going to be looking at the Fed fund rate next year, and they're looking to raise it 4 more times. Are they ever going to get to that? Most likely no. Most likely what's going to happen is they're going to say, yes, we're going to be raising the rates. They might do it 1 more time, another 0.25%. But if everything goes as planned, the event will occur. They will never get to raising the rate, and they will blame this entire collapse on another group or country. All eyes will be off of the central bank. They have just proven that they've recovered the economy. Their task is complete. Now we're in the next phase. Now we're heading towards that area of when they're getting prepared and ready to push this war forward. Now, at this point, since everyone believes that we're in this recovery, they're going to suppress gold even further. We're probably going to see oil prices go down even further. Already Saudi Arabia is saying that they're going to continually pumping oil. But what's very interesting is that there is a glut of oil, and it's starting to manifest itself in a flotilla of stationary supertankers in the Atlantic. There's about 40 crude tankers with combined cargo of about 28.4 million barrels waiting to anchor near Galveston. 3 diesel tankers en route from the Gulf to Europe did something very odd. They stopped, they turned around in the middle of the ocean, headed back the way they came. At least 3 37,000-ton tankers, the Vendome Street, the Atlantic Star, the Atlantic Titan, they have made U-turns in the Atlantic Ocean in recent days, and we are now heading back west. Basically, all these tankers have no place to go whatsoever because they're just continually pumping out oil. There's no demand for it. They're just driving down the prices. Now, we know the U.S. government has just passed the omnibus bill. There was only one congressman who voted no on this bill, and this is Paul Anthony Gosar. He's an American Republican politician, and he's the member of the House of Representatives from Arizona since 2011. And he went on to say that he voted no on the massive omnibus spending bill. He said the bad far outweighs the good, and overall this bill misses so many opportunities. He said the bill is about 2,242 pages of legislative text, and he said the bottom line is this is a big spending bill. It spends more than $50 billion than is authorized and agreed to under the Budget Control Act of 2011. This alone is reason to reject this bill. The omnibus does not defund the president's executive amnesty orders and fails to prevent funds for sanctuary cities. And he's saying the bill failed to defund Obamacare. The bill failed to include provisions blocking refugees from Syria from being resettled in the country until we have a system that can properly vet them. Worse yet, the bill allows the president to bring in as many refugees as he wants and allows access for these refugees to welfare and entitlements at taxpayer expense. It increases the IRS spending by over $200 million and includes $500 million increase for the wasteful and inefficient Head Start program. The bill bails out the International Monetary Fund by increasing the U.S. quota. This IMF will now have access to even more taxpayer dollar in order to fund bailouts of other irresponsible governments like Greece, Ukraine, and so forth. But when you look at this, and you look inside this, you see something very interesting. The number of H-2B visas are going to quadruple, and this allows low-skilled foreign guest workers in. It would allow more than 250,000 foreign workers to enter the U.S. each year and work in construction, hotel, motel services, truck drivers, food processing, forestry, and many other fields that don't require any type of college education. Companies will not have to worry about them, the penalty whatsoever. And you can see this is part of their plan. They need new blood in this country to continually pump up the bubbles. They need them to get jobs. They need them to take auto loans, student loans. They need them to purchase a house. And then eventually all of these people will become citizens. They can go right on to Obamacare. This is the entire plan. But what's very interesting, and I mentioned this before, slipped inside of this omnibus bill is CISA. It's in there. And again, Obama said he was going to veto this, but of course you know what's going to happen. Late at night, during Christmas or New Year's, he will sign this, or whenever he gets around to doing it, and it's all going to go through. And this law of this bill, this legislation of CISA, will then become law, which will allow companies to spy on the American people and to give that information over to the government without holding them liable. Planned from the beginning, and it's all happening right in front of our eyes. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.